I admit, when I first heard about trading, I imagined a picture of confusing charts and a surefire path to emptying my wallet. But a few people consider the other side of the coin. Trading is just a tool that becomes accessible with a sensible approach. My start was just as chaotic. A platform, charts, indicators, flashing numbers, everything seemed to follow the instructions, but the outcome was still unpredictable. And that's where the most important thing begins. Real trading isn't about mechanically pressing buttons, but about developing your thinking. It mercilessly reveals who you really are. Whether you have patience, whether you know how to wait, whether you can manage your emotions. It took me a while to realize this. At first, like everybody else, I just wanted to try it out. A couple of trades, and then you're expecting things to work out. And then you sit there and wonder, why didn't it work? And that's when the first important realization dawns. It's not randomness that's at work here, but a system of observation, analysis, and reaction. Every movement on the chart isn't just a line, but human behavior. And when you start to see what's happening behind the charts, everything becomes clearer. But I won't lie, it's difficult at first. But like anything, mistakes are inevitable. It's important to develop an approach that works for you. Understand how you think and how you react when things don't go according to plan. I've returned to the demo account many times. It's the best tool to start with. By the way, it doesn't matter if you're a beginner or have already tried a little, but a demo account helps you understand what's going on without unnecessary stress. When you're not overwhelmed by money, you begin to see the market calmly without panic. And that's when understanding emerges. Gradually, you become to sense the dynamics. When the market accelerates, when it slows, you no longer guess, but read the chart like a text. Sometimes you feel like you already know everything about trading. You understand the charts, understand the indicators, and recognize the support and resistance levels. But as soon as you open a trade, all the knowledge seems to evaporate. Your heart starts pounding, your thoughts are racing, and you want to quit. Just get out of the picture. Sound familiar? That's the real test, not of your trading tools, but of your ability to control yourself. Psychology in trading is half the battle. You can be an expert in technical analysis and know all the patterns and the models, but if you can't manage your emotions, success is unattainable. And I'm not saying this lightly. I've also had moments when I wanted to give in to emotions and make an impulse decision, but the market doesn't tolerate haste. It demands patience. There's a simple rule. The calmer you remain, the more balanced your decisions will be. When there is no rush, you see the situation more clearly. The key is a systematic approach. I like to compare trading to sports. If you want to progress, you need to practice. Start with a demo account to hone your skills, then move on to the real trades. If you make a mistake, analyze it, change your approach, and try again. Don't be afraid to make mistakes. Be afraid not to learn from them. One of my first serious mistakes was overestimating my emotions. I thought I had them completely under control. But when I saw several losing trades in a row, I realized that control was just the beginning. The problem isn't the market, but how you react. Incidentally, it's a very useful skill to notice how emotions influence your decisions. It's useful not only in trading, but in life as well. Another common mistake is trying to win it all at once. The brain is looking for a quick result, especially when you see the price moving. It seems like if you don't get it now, you'll miss out. But in reality, it's a trap. The market will be there tomorrow, the day after tomorrow, in a month. And your job is to learn to see these patterns, not chase the movement. And when I finally realized that speed doesn't matter, things became much easier. I stopped rushing and started paying close attention to the charts, how levels are formed, how the price reacts to various events. I developed a simple process. First, look at what's happening. Then I decide what to do. Then I look at the result. And then I draw conclusions. I do this every day. It's become a habit. It doesn't matter how the deal ends. What matters is what you get out of it. People are just starting out often write to me, where should I start? How do I know I'm doing it right? I always tell them, same thing. Take your time. Trade on a demo account. Get a real feel for how the market moves and understand the indicators. Gradually, you will begin to notice patterns previously went unnoticed. And to make it easier for you to understand all of this, I created my own Telegram channel. There, I post analysis, examples, and explain everything in simple terms. Everything that helps you understand how trading works from the inside. The link to the channel is below this video, so join if you want to get more useful information and move forward with us. And to make things more interesting for you, every week I hold a giveaway, and one lucky winner gets to win 100% bonus on their deposit. Leave a comment saying, I want to enter the giveaway, and I'll send you a special link. Returning to the topic, trading gives freedom, but only to those who know how to handle it. Many people think freedom means doing whatever you want, but in trading, it's the opposite. Freedom comes when you know how to limit yourself. I've been working towards this for a long time. Sometimes not even through the market, but through myself. Once my inner state became more stable, I was finally able to calmly observe the process itself. I realized that without tools, you're like walking through fog. You seem to see the direction, but every step is a guess. Tools, however, are like a flashlight. They don't eliminate risk, but they help. You see a little further down the road. The first thing I did was sort it out. Essentially, it's an indicator that shows how tired the market is. When the readings are too high, the market is overheated and the pullback is possible. When the readings are low, on the contrary, it's oversold and rally is possible. RSI simply helps you avoid getting into situations where everything has already been done before. Then I connected a moving average. This is where a true understanding of movement begins. If the price is above the line, the movement is upward. If the price is below, it's a downward. But the main thing isn't that, it's how you perceive this line. It teaches you to take a broader view. You stop reacting to every fluctuation and start seeing the trend. Then I discovered MACD. First, it seemed complicated. Those lines, the histogram signals, but then I realized it's simple. It shows how strong the movement is. If the lines diverge, the trend is strengthening. If they converge, the market is slowing. The MACD gives you an understanding of rhythm. When all of this comes together, RSI, EMA, MACD, the picture becomes much clearer. You begin to understand where to watch and where to act. Sometimes just sit on the platform and analyze and simply watch how the picture moves, how the indicators react, how patterns form. I hope I haven't become boring with my talk, but to make things easier for us, I suggest we take a look at a practical part. So, we open our first trade on the AED CNY OTC. and see a sustained upward movement. The RSI reaches 70, so we open a short position for 1 minute and close in the black. We open a second trade on the TND USD OTC. We see the price rapidly move away from liquidity on the left, which is the resistance level, and the RSI also moves beyond 70. We open a 1 minute trade, and the trade also closes in the black. We open our third trade on the AED CNY OTC, returning to where we started. We see the price has reached the 20th EMA but hasn't broken through. Just like before, therefore, we can make a similar move up on the pullback of the 20th EMA. And the trade closes in profit. The fourth trade is opened on the EU RCHF OTC. We see that the price has broken through the 20, 50 and the 100 EMAs, and it's continuing to move higher. But we've reached the RSI value of 70. This means a downward reversal is likely. So we place a 1 minute short. Unfortunately, the trade closes at the edge, but the price doesn't move any further, meaning it doesn't break through the previous resistance level. From here, we take a 2 times gain and re-enter the last trade short, and our fifth trade closes in the black. And with each trade, I begin to notice that even simple observation yields experience. For example, you notice that after a strong move, the market often pauses, or that a support level isn't just a line. It's a place where the market participants have already shown a reaction. But knowing the right tools is only half the picture. A trader's true strength lies in how they manage risk, because risk isn't your enemy. It's just part of the game. If you embrace it, it becomes your ally. If you ignore it, it would ultimately take everything. Many people underestimate this aspect. It seems like the most important thing is finding the perfect entry point and catching the move. But in reality, it's how you plan your actions, how much you're willing to bet, where you'll stop if things don't go according to plan. This is discipline. Without it, trading turns into chaos. With each year spent in trading, I increasingly realize that it's not just about making money. Financial results are important, of course, but they are never the result of luck. They come as a natural consequence when you stop obsessively chasing them, when you let go of the need to prove your abilities to yourself and others, and simply focus on taking the necessary actions. Trading is a school of life that forges character, forces you to face your own shortcomings, and the more honest you are with yourself, the further you can go. There are periods when it seems like nothing is working out, but that's part of the journey, and the process that involves progress will have its ups and downs. And it's important not to stop, even if you don't see any results yet, because one day you just wake up and realize you're a different person, calmer, more attentive, more focused. You're no longer looking for quick fixes. You simply live in the process, and it becomes a natural part of your day. And you know, the most interesting thing is that over time, trading begins to influence other areas of your life. You become more patient with people, more attentive to detail, calmer in your decisions. You understand that control isn't about foreseeing everything, but about not losing yourself. When something doesn't go according to plan, This is perhaps the most important lesson the market has taught me. I try to share all of this on my Telegram channel. It's not just analysis and breakdowns, but also real-world experience, discussions and support. We analyze mistakes, learn to understand the market, and share our observations. For beginners, this is a great opportunity to enter the environment where everything is explained simply and without pressure. So, if you want to hone your skills and gain a deeper understanding of trading, this link in the description down below, come on in. There's a lot of useful information. It doesn't matter where you start. The main thing is that you keep going. Any knowledge, even the smallest, brings you closer to confidence. And if you take it step by step, not rushing, but learning, you will definitely achieve your goal. And see you in the next video.